Hello traders. In this video, I want to speak about GBPUSD and I will make a technical analysis on this pair. This is simply to help us understand where we have the highest probability for the next potential move. So we're going to do a top-down analysis on this pair and I'm going to start from daily time frame. So if we look at GBPUSD, we can see that price is currently trading at this area of 1.32123. We're talking about this current price here. Okay, so that's where we have the current market. So now we have to start our analysis. If we take a look at this GBP we can see that price after reaching this peak level of 1.35996, we started seeing some form of decline. Price dropped, breaking this structure here. It made a pullback to that key level of support which now turned resistance, we started seeing further decline. Price also broke a structure around this level after it made this pullback here, and then we had a new low. So this is just a sign that market has been trending bearish. Okay, and right now we see that price is at this area of support here. Okay, historically price reacted off of that zone. In fact, from here, all this move to the upside was created, and right now price is at that support level, and I actually anticipate price to make some form of correction off of that zone. Also, we can see that price just formed an M pattern. We are familiar with this M pattern, and in general, after price forms an M pattern and the neckline is broken, we usually see how price retraces at least to complete the neckline. And in that case, from what we have here, we can clearly see that the M pattern is already formed. This is the first, sorry, uh, let me pick this. We can see this is the first peak, this is the second peak which forms the M pattern, and the neckline which is this low is already broken. So what I anticipate is just a form of correction, at least to the 38.2% Fibo retracement, because if we pick our Fib retracement and measure from here to this low, we can identify the the 38.2% fib retracement level to be at 1.32997. So that's actually where I anticipate price to retrace to. Okay, so let's make this visible in our interval. So let's now check the intraday time frame, which is H4. Now, here from the H4 time frame, we can clearly notice something significant here. Just before market closed on Friday, we saw how the buyers were able to engulf sellers completely. We can see that bullish engulfing candle here. So the momentum of buyers on Friday was sustainable enough to close above the open price of the last sellers. So this is also a good sign that buyers are going to step in this market, and we're likely going to see price retrace back to the area of 1.32977. Okay, so this is what we envisage from the intraday time frame H4 in particular. So we are looking for a buy opportunity. So just to finalize our analysis and take our entry from the current market price, we just have to look at lower time frame, which is H4. Sorry, which is 30 minutes time frame. Here from the 30 minutes time frame, we see that it is just making enough sense for us to buy from the current market price. Why? We can see that when market opened, there was a gap. Okay, so market opened below the closing price on Friday, and after the gap was attempted to get filled, that means price attempted to fill in the gap, and after that we had some pullback. So the pullback is another testing phase for us to be able to buy. Okay, so what we're going to do is to buy this market from the current price. So from the current price here, we can clearly see that if we are to go long from here, we can actually set our stop loss at this low here. We can see the last bullish candle that was formed left a dodgy candle, and dodgy candle is a good sign of exhaustion. So since we've already seen seller's exhaustion from here, since we have already seen seller's exhaustion from the current price, it just makes sense for us to buy, and then we'll set our target profit. Um, this was the H4 resistant line or key level that we anticipated. Just before that price zone, we'll be targeting about 1:4 risk to reward ratio. Just this fair value gap here is where we are going to exit our trade. So if we look here, we can see fair value gaps. Okay. So once that fair value gap get filled, we should be taking our profit, and that's gonna give us approximately 70 pips. Okay, that's gonna give us about 70 pips. So this is how we position to buy GBP USD from the current market price. So let's see how market reacts. Thanks for watching.